Hello, everyone, and welcome to this month's webinar on small business financial survival, finding the loans and grants you need now. This free webinar is available exclusively for our customers enrolled in our subscription services. I'm Leon Frierson, the Publications Coordinator for Personal Concepts, and I'm joined by my co-moderator, Rosie Merlan, who serves as our Senior Regulatory Researcher.
Hello and good afternoon to all of our attendees. Hope everyone is staying safe and healthy during the pandemic. I'd like to welcome our guest speaker, finance expert Joe Donlevy. Joe is the principal at Fillmore Capital in Charlotte, North Carolina. During his career, Joe has held the roles of Senior Vice President and Executive President in the commercial banking industry. He has over 22 years of experience helping small and mid-sized businesses with financing options, including serving as the National SBA Product Manager for a top 5 U.S. bank. Joe has undergraduate and graduate degrees in business administration from East Carolina University and Wake Forest University, and also served in the United States Marine Corps Reserves. Thank you, Joe, for joining us today.
Hey, thanks for having me, Rosie and Leon. Obviously, these are unprecedented times for the American economy, and in particular, it's really hit small businesses pretty difficultly. And so I'm excited to share information that we've got on various national and some local programs that might be available to provide assistance. And so a lot of attendees are aware that the Paycheck Protection Program is no longer taking applications for funding, but that doesn't mean that there aren't other options out there available. And so today we're going to cover a lot of the primary programs for business owners, as well as some of those that you may not have heard of, but they're still available to you. Leon?
Thanks, Joe, and we're definitely looking forward to discussing the topic with you now. Before we proceed, we want to make sure that everyone is able to hear Joe clearly. I know I may be having a little issue, so just make sure you stay as close as you can to the audio, Joe. And please check the volume on your computer or mobile device at home if you are having any further issues. If that doesn't solve the issue, just let us know in the chat, and we'll work to improve the audio as the best we can. I also want to remind everyone in attendance that you can download the slides for today's presentation and our small business financial assistance guide by clicking the links in the handout section of the GoToWebinar menu. So yeah, make sure you check out those handouts, and we're going to be talking quite a bit about the FAQ throughout the presentation. Rosie?
Okay, so as Joe mentioned, today's agenda focuses on providing an overview of the various financial assistance programs available from the Small Business Administration, commercial banks, and other entities. We'll start off with an overview of where the Paycheck Protection Act currently stands, as businesses who receive funds for that program can now apply for forgiveness if they meet certain criteria. Next, we'll cover economic injury disaster loans and small business debt relief programs. Then we'll cover the main financial assistance options still available to small businesses from the SBA and other sources, including Main Street lending. And lastly, we'll discuss some non-bank lending options that require extreme caution. The webinar will conclude with Joe answering questions from our audience.
And the format for today's webinar features a series of questions that we'll be asking the Joe regarding well-known and lesser-known financial assistance programs available to the nation's small businesses. It's also important to note that the information provided in this webinar is intended to provide a broad overview of loan programs available to small businesses. Personal Concepts does not provide financial advice to its clients, and the options of our guest speaker are not intended to represent financial advice of any kind. Clients are advised to contract with or consult with a financial advisor about their specific circumstances, before applying for any of the loans or grants discussed in this webinar. We do not specifically endorse any of the programs described in the webinar, and we cannot be held liable for decisions made by our clients regarding these and other loan programs.
Okay, so we'd like to kick off with a quick poll question to our audience. What are you most interested in learning about in today's webinar? Small Business Administration SBA loan programs, non-SBA loan options, lesser known financial options, debt relief and loan forgiveness, or non-bank funding sources? We'll give everyone a moment to answer that. Okay, it looks like most of the votes are in, so let's go ahead and share our results. Okay, so this is scattered throughout the board. Looks like most of you want lesser known financial assistance options and debt relief and loan forgiveness.
Great information to know, and they'll be happy to know that we will cover pretty much everything that was discussed there. So wherever you landed on that poll, hopefully we'll answer your questions. And before we begin, though, I do want to invite everyone in attendance to submit any questions you may have during the presentation by using the Ask Question feature in GoToWebinar. That's in case we don't get to it. You can also post questions in the question window, and most questions will be saved for the end of today's session, but those that are relevant to the subtopic being discussed will be posed where appropriate. Then at the end of the session, you'll have an opportunity to use the raise hand feature in GoToWebinar and pose a question directly to our guest speaker. Now with that, let's get started with today's presentation.
Okay, so Joe, many small businesses applied for the Paycheck Protection Program through the Small Business Administration. Can you give us a brief update on the status of that program?
Yeah, absolutely, Rosie. So as we mentioned in my opening comments, that as of August 8th, the Paycheck Protection Program is no longer accepting applications. And so just for a recap of what that looked like, so that program started in April, and from April till August accepted almost 5 million in small business loan applications that amounted to 525 billion in funding. And it's important to note that 80% of those loans were $150,000 or less, because obviously this being the cornerstone of the CARES Act was targeted towards small and micro business owners. Now, with respect, we talked about some of the stats on that. The closure date we talked about being August 8th, but you have 10 months after the covered period, which we'll talk about in a moment, to apply for forgiveness. So I think the takeaway here is there's not a rush to fill out your forgiveness application. As we're all aware, there were a lot of starts and stops with the rollout of the program and certain criteria that changed, some of which may have some tax implications. So, the two takeaways is stay in touch with your financial institution, but don't be in a rush to submit your application. Use the time available to you to make sure that you're doing it in a sense that makes the most economic benefit for you. And so you may be aware forgiveness is based on retention and salary levels. So retention, of course, that tracks to full-time equivalent or employees, and that if you were able to retain all your employees, obviously that's a very favorable thing. But if you did have a situation where you had termination or voluntary resignation and you had to try to replace that job, it's important that you want to keep records of any communication or efforts to do so, as that's part of forgiveness. And then, of course, on the salary levels, we've got a couple points below that we're going to discuss that are key to that. So the key eligibility requirements, like we talked about, obviously 60% of those funds, which of course were intended to retain jobs, should be used to cover payroll-related expenses. Certainly okay if you include more, but at least 60%. And then anything where you had an employee that had a reduction in their W-2 salary expense or their hourly expense of greater than 25%, that does get excluded from forgiveness. What part of that is not excluded is if you did have employees or owners that earned over $100,000. So in other words, if you had someone making $150,000 and you had to reduce it to $100,000, as was capped by the Paycheck Protection Program, obviously that's not going to count against you. So that's not what we're talking about, but just be aware of that. And then I would think in terms of the last point that's important to note is there was really two covered periods, which again is one of these changes that we talked about. The first one when it rolled out was an 8-week covered period, which is again measuring that period of time of how you allocated those funds. But then subsequently that expanded to 24 weeks, which is a great thing. But at the same time, you may want to look at both of those covered periods, particularly if you had some employee attrition, and maybe you could meet the criteria on an 8-week forgiveness period, but not on a 24-week eligibility or covered period. So important to look at those two things, and just remind yourself that the period cannot exceed 12/31/2020. Rosie?
Okay, thank you. And I think this is a good point to ask another poll question. We'd like to remind everybody that what you select is anonymous. Did your business apply for or receive a Paycheck Protection Program loan? Yes, we received PPP funding. We applied but were denied, or no, we did not apply for a PPP loan? Okay, and it looks like votes are still coming in, so let's give everyone another moment to answer that. Okay, it looks like most votes are in, so let's go ahead and share our results. Okay, so it looks like, yes, we received PPP funding for most of you.
Right, so that's great for them. We had another 30 to 40% that it looks like they either were denied or did not apply. So this next section should pique their interest. Joe, now that we provided a quick update on PPP, can you give us an overview of the other financial assistance options available to small businesses now that the PPP has ended?
Yeah, absolutely, Leon. And like you said, it was great to see a large number of individuals who did apply for and receive funding. But like you said, there's good news in that there are alternatives, and some of these have varying degrees of obligations that go along with that. And so we want to make sure we hit the high points, but also some of the areas that you need to be aware of that may impact your decision with respect to moving forward with these programs. So the first one that many of you may be more familiar with was the Economic Injury Disaster Loan, EIDL as it was known, and was also rolled out as a grant. And so we'll talk about that. There was the debt relief program that applied to all 7A loans, but also 504 loans as well too. And so we'll touch on that. There's the Main Street Lending Program, which again was part of the CARES Act, but maybe hasn't gotten as much attention because it was a little bit slower to roll out. And so we'll discuss that. Then you have the traditional SBA loan programs again, and these are probably more applicable to individuals who are looking to grow or pivot possibly their business strategy. And so there's some thoughts there. The next one is with respect to the U.S. Department of Agriculture, USDA, that offers the Business and Industry Loan Program. And it's kind of akin to the 7A programs, so we'll differentiate those. And then lastly are some non-bank lending programs that we want you to be aware of, but taken with cautious lens as you evaluate those. Rosie?
Okay, so you mentioned you'll be going through each of those programs during the presentation, but let's start off with small business debt relief. What debt relief options are currently available?
Yeah, and Rosie, that's a good question. I think we should clarify. This is a specific program rolled out through the SBA. The good thing is if you were eligible, there's nothing that you needed to do because you were automatically enrolled by the SBA. And so this applies to non-disaster loans, meaning this doesn't encompass the PPP that we talked about or EIDL, but effectively it does include principal and interest payments that you had on an SBA 7A or 504 loan, which we'll talk about a little bit later in the presentation. And so when we talk about covering 6 months of loan payments, what's great about this is it really is as close as you can get to free money, and that your payments for those 6 months would be paid for by the SBA. So it's not a deferral, it's not any type of forgiveness piece, it's literally they're making the payments for you, which are being applied to your principal and interest due, which is fantastic. And the other thing to note is that it's available not just to borrowers who had existing loans, but if you applied for a loan after that period of time, which was, I believe it was March 23rd is when that portion of the CARES Act was implemented, all the way up until closing a loan on September 27th, which you still got a little bit of time. And if you haven't applied, it might be too late for you. But that would also apply to your first 6 payments. So that's just a great thing to know, and just ensure that if you did have that in place, that you were able to take advantage of it and that you were automatically enrolled. And if you weren't or you have questions, certainly contact your lender who originated that loan for you. Next, as I mentioned in my opening comments, is that there was the Economic Injury Disaster Loan, which most people were probably, it was as synonymous with the Paycheck Protection Program. And so again, it's probably was the most obvious, and it's still available as the date of this webinar, which is a good thing. You know, when it rolled out, you may remember this started out as a $10,000 grant, and then it was later advised or changed to it was $10,000, but it was limited by the number of full-time equivalent employees. But as we mentioned here, it's still available as a loan. And it's a low interest rate loan that's up to $2 million. So there's a really broad opportunity to borrow money under that. And what these funds can go towards are basically any expenses that normally could have been met was it not for the coronavirus COVID-19 pandemic. And so as a result of that, you might have found issues meeting payroll or paying for particular sick leave, or maybe you had production issues where you had supply chain interruption, or just found yourself in a situation where you had existing debt and you just weren't able to pay it. So all those are completely fine to use the source of these EIDL loans for. And so you still have until December 31st of this year, or until the funds that have been allocated have been depleted. And these loans are repayable up to 30 years. You know, what I also want to say too is, unlike the PPP program, you're going to apply for this by going directly to the SBA.gov website. And we've included that in the FAQ documents for you to be able to access very easily. A couple points of caution that I just want to roll out there as you look and see if this program makes sense is, know that these loans, unlike the PPP, you do have to pledge collateral from your business, which means that the SBA is going to have a blanket lien on your business assets. So what does that mean in practical terms? What it means is that normally when you go apply for a business line of credit at your local bank, they're going to want to be able to take a lien on those assets. And so if the SBA already has those encumbered or has a first lien, it may create problems for you down the road. And then the second area of caution that I would say, or just to be aware of, is that you cannot use these funds to pay dividends, bonuses, or make repayments of shareholder loans. And if you think about that, I mean, this loan's out there for 30 years. So according to the letter of the law, as long as that loan's in place, you are restricted from using funds to do that. So there's a little bit of a gray area that you just may want to be aware of, and make sure, again, whatever you do, you're taking copious notes and making sure that you have records for how you spent these funds. Rosie?
Okay, thank you. And before we move on to other options that are available, we have a quick poll question. At what capacity is your business currently operating during the pandemic? Please select one. Are you fully open? Are you partially open? Are you reopening soon, or are you closed? We'll give everyone a moment to answer that. Okay, it looks like most of our votes are in, so let's go ahead and share results. Okay, so it looks like most of you are fully open, followed by partially open.
And that's great for those businesses to at least be partially open. But although they are open, it seems like they may be looking for some additional capital to help them survive, and maybe we can help them out, and that's why they're here today. So one program that hasn't been quite as publicized as the Paycheck Protection Program is what's known as the Main Street Lending Program. Joe, can you explain what that program is for our audience?
Yeah, sure, Leon. I think that's a great point, is that many people may have heard the Main Street Lending Program, but they're just not really sure what exactly it is. And so we'll hit on some of the overview of it and then talk about the main features. And so again, it applies to small and medium-sized businesses, again, which is a very generic term, and we'll drill down into that. But the first question people might ask themselves is, where do I go to apply? And fortunately, again, in our FAQ document, we're going to have a link that will tell you where banks who are participating in this program in your community can be found. And so you can go there and check at that, because this is delivered through commercial banks. You know, unlike the EIDL that we just talked about, like PPP, it is going to be delivered through commercial banks. You know, the difference being between this and the Paycheck Protection Program is this is a loan, and there's not a forgivable element to it. It's just certain banks will receive a guarantee on any losses up to a certain amount. And so the program has been allocated $600 billion. So last time we checked, there was a very small participation percentage. So there are plenty of funds left. And the loan amounts, at least the ones that we're discussing today, range from as little as $250,000 all the way up to $50 million. So again, it's a pretty broad range, and that's why I say small and medium-sized businesses. It's a very subjective term, but just know if your needs meet at least 250, it might be worth further inquiry. And now I did say that we're going to talk about the two products, or focus on the two products that are most geared towards small businesses, because when you look at the Main Street legislation, there's actually a total of 5 loan programs under Main Street. And again, the new loan facility and the priority loan facility, they're very similar. Only real difference being new loan facility is just new funds, where the priority loan facility might involve refinancing existing debt that you have plus some new funds. Other than that, they're all the same. And then the remaining 3 we aren't talking about. 2 are targeted towards nonprofits, and then the other one is really for larger companies, and that expands up to 300 million. When we talk about some of the features of the Main Street Lending Program, or just a general view with respect to the new loan facility, the priority loan facility, is that one, the structure is a 5-year maturity, a 5-year note. And there, during that period of time, your principal payment is deferred for the first 2 years. And then in addition to that, the interest component can be deferred for 1 year. But I want to note again that that unpaid interest will be capitalized. And so what that means is the interest that's accruing will also be charged interest on it. So that will actually cause your overall interest expense to go up should you allow that interest to be deferred. So it's just one of those things you want to be cognizant of and determine if you have extra cash that you want to put towards that, you're able to do that. The other component is we talked about principal deferred the first 2 years. So what happens is in years 3 and 4, 15% of the principal balance in each of those years is going to be required to be repaid. Then at the end of the 5th year, or the end of the program, the remaining 70% balance comes due, which is obviously a big number. And so the obvious question is, what do I do if when that comes due? You know, it's a little bit less clear in terms of guidance, and it's going to vary bank by bank. Some banks might have the ability to term out the balance of that note, while others might expect for that balance to be paid or to be refinanced from another lender. So again, really important to have those conversations up front and know what you're getting into. You know, I did talk about the fact that the minimum loan amount is $250,000 and the maximum is $300 million for the overall Main Street facility. But again, the ones that we're focused on have a limitation of up to $50 million. The rate on these are all the same, whether it's $250,000 or whether it's $300 million, which is, it's an adjustable rate, meaning it's going to change, it's not fixed, and it's based on what's known as the LIBOR, 1 month or 3 month. And so again, we've put a link to LIBOR in your FAQs, but you can also go to any economic website and it'll tell you. Just for informational purposes, today, 1 month LIBOR is 0.15%. And then you're adding that spread of 3%, which would mean the rate today would be 3.15%. But what's interesting is, if you look at LIBOR a year ago at this time, LIBOR was almost 2%, or actually slightly over 2%. So your rate a year ago would have been over 5%. So it's important to note that interest costs can change, and just you need to think through that as you're evaluating if that makes sense for your business. And the last point is I referenced a little bit earlier, is that you can prepay the Main Street loan without penalty. So again, while there is that principal deferral available, maybe you're saying, I don't want to take advantage of that because I don't want to have a large payment due at the end. And so you're able to throw additional funds that you may have to help keep that in check. Rosie?
Okay, thank you for that explanation, Joe. And what other types of non-disaster loan programs are available through the Small Business Administration?
Yeah, Rosie, while there are a lot, look, we're going to focus on 2 that are probably the most relevant for our audience. Well, the first one's the Community Loan Advantage Program. And so with that, this is designed to assist small business in underserved markets. And when I say underserved markets, that could be certain neighborhoods within a metropolitan area, or it could be rural markets that have been designated as quote unquote underserved. The maximum loan amount is up to $250,000. So again, kind of the opposite. It kind of leaves off where Main Street picks up. And what's the most important, I think, that to walk away with this is that businesses can apply with what are called mission-based lenders. And we're going to talk about those later in the presentation, but quickly speaking, those are called CDFIs as the acronym, or Community Development Financial Institutions, which are located in every state and every city, where they can serve, again, businesses that historically have not had the same access to credit or financial institutions in their market. The second program is the Express Bridge Loan Program. And so this is actually the caveat to this. There's really two. One is that it's really targeted to businesses that already have a partnership or a relationship with an SBA Express lender, meaning that you have to have a checking account or a loan with a business who originates SBA Express loans. And that information can be found either by talking to your financial institution or going to the SBA.gov website, which we've provided in the FAQs. And these are designed to provide up to $25,000 for losses incurred by businesses while they've waited for the EIDL loan. Because as you remember, we said that the EIDL loan was being directly applied for through the SBA website, which means that they're really busy. And so this can provide, as the name intends, a bridge until you get those funds in. And so this might be an option for those on the phone that do have a relationship and did already apply for, or they intend to apply for an EIDL loan, because remember, there's still time for that. And these are just credit score based is the other thing in terms of criteria that's being looked at. So just remember that as you're having discussions with those lenders for those that are eligible. Leon?
And, yeah, thanks for reviewing that for us, Joe. I know that some of the more popular SBA loan programs are the 504 and 7A loans, but for the benefit of our audience, can you walk our audience through the specifics of these and other commonly used financial assistance options for the SBA that the SBA currently offers?
Yeah, no, I think that's important to do, Leon, and also want to differentiate that some of the programs that we're going to talk about, particularly these two, are not necessarily intended as a result of what's been dealt with from the pandemic or economic fallout, but these are like flagship programs that the SBA have, and the two that we're going to talk about are the most common. The first one's a 7A program, which offers loans up to $5 million. And so these are all-inclusive loans for eligible businesses. And if you're not sure whether or not you're eligible, again, I'm going to reference that link on our handout, the FAQs, to the SBA website, which has a list of eligible businesses. But the funds can be used for a variety of things. And what I'll say is most common is owner-occupied commercial real estate. And you might ask, why would I use that program? Well, it's up to 90% financing in 25-year terms. So there are some benefits to that versus a traditional bank loan. Can also be used for equipment purchases, or maybe just working capital that you need to purchase inventory, or maybe you're in a situation where you're looking to acquire a business or buy out a partner during this time. All of those are eligible purposes, and they offer extended terms, lower loan to value, so you don't have to have as much money to put into the transaction, which can be very helpful compared to traditional bank loans. And then really the 504 program shares a lot in common with the SBA, but by and large, it's used for business owners who are purchasing owner-occupied real estate, just like the 7A. There are some differences in how the loans are structured, and there are benefits depending on what your situation is. So you just want to make sure if you're buying real estate or large pieces of equipment that you look at both the 7A and 504 program, because they have some very favorable attributes to them that can cause the payments to be much lower than a traditional bank loan. And then the overall aim with this program, as really with the 7A, is to ensure there's job creation and retention. And so some of that information is tracked so the SBA can really justify and say, hey, listen, we're creating jobs, we're maintaining jobs in our community, and make sure that these programs continue to be viable. Rosie?
So Joe, what about those businesses who aren't looking to acquire real estate or fixed assets and are looking to increase their working capital or improve their cash flow in the short term? Are there any programs that meet those needs?
Yeah, I think that's a good question, Rosie, in that, we talked a little bit about some of those programs that are more of the quick hits, but we're also going to talk about two other programs that are available to small businesses that they should consider as they look at options available to them. The first is the Express Loan, or SBA Express Loan, as it's also known. And these are loan amounts that are up to $350,000. And so the term of these loans are a total of 7 years. And you have an option to revolve these loans, meaning that they initially are like a line of credit where you draw down on those funds and you only pay interest on the amount that you have borrowed. And so you may have an interest only period or a draw period, as it's called, of anywhere up to 3 years. And then what would happen is your loan would term out over that remaining period to get to a total of 7 years. And the reason it's called express is obviously because the turnaround time is generally about 36 hours. These are, again, generally speaking, these are loans that are credit score based or require very light financial information and verification. It's really to get money out the door as opposed to the aforementioned 7A and 504, which are going to be a little bit more arduous and take some more time. The next section, we talk about microloans. I know this is a really ambiguous term because it does apply to a lot, but the first level or the first section of microloans we're going to talk about are offered through nonprofit lending organizations in underserved markets. You heard me mention CDFI, or Community Development Financial Institutions. And again, I promise we're going to talk about those, but those are organizations or institutions in your community that are either disguised as credit unions, or maybe you even think they're banks, but they have a particular designation. And that designation allows them to take on a little bit more risk than a traditional bank. And typically microloans are used to describe loans that are up to $50,000 and that are predominantly used for working capital, inventory, machinery, equipment, but generally not real estate involved. And so those are where someone might need some quick access to capital. And in addition to the microloans being delivered by nonprofits, some of these are in conjunction with your local or state government. So I also want to encourage you to take a look at your local Chamber of Commerce or your Department of Commerce website. You can go there, and a lot of times they'll have links to either grants or microloans that are in your community, and that's going to be different for every participant on the phone. Leon?
Yeah, and those certainly sound like great options for businesses that need working capital or equipment fast. But in addition to all the programs that you have told us about today, are there any other SBA programs that small businesses should know about now?
Yeah, I think so, Leon. You know, the two that I think about are the export loans, and this is targeted to businesses. We talked about maybe some businesses are in a position to pivot or change strategy. Well, if you're on the phone today and you actually make a product, think about if you had the ability to export that overseas and open up markets that you previously didn't have. That can be really tough to do in a traditional bank relationship. And so the SBA has the Export Express Loan, the Working Capital Program, and the International Trade Loan Program. And you can see which lenders participate in those that will help you get financing required to be able to ship products overseas. And there's some nuance with that we won't get on the phone to go over on the webinar today. But again, I would encourage you to go to the SBA website, look at a participating lender, or contact the local trade center that's in your community that is an SBA organization that you can find on the website to look at that. And then the second one that individuals may be familiar with but not know a lot about is the 8A Business Development Program. And so this isn't a loan, to be clear. This is actually a program that was designed to help small businesses that are owned at least 51% by someone classified in an economically or socially disadvantaged group, or they just have historically not been served by mainstream banks like a lot of other businesses. And so this allows them access to government contracts, other contracts that are generally would not be available without the assistance of the SBA, but primarily it's to make them eligible to be able to do business with the federal government. Because the federal government said, hey, listen, we want the suppliers that do business with us to represent the communities that we serve. And historically, that hasn't been accurate. And so this is designed to reduce some of those barriers to entry for businesses that fall into that category. Rosie?
Okay, thank you, Joe. And we have another quick poll for our audience. Has your business applied for any of the various loan programs that we've discussed in this webinar so far? Yes, we applied and received funds. No, we have not applied for any of these loans or grants. We have an application pending, or you're not sure. And we will give everyone a moment to answer that. Okay, it looks like votes are still coming in. Okay, so I think most of the votes are in. Let's go ahead and share results. Okay, so no, most of you have not applied for any of the loans or grants discussed so far.
Great. So it sounds like we're spreading some good information, Joe. That's great news. However, I do have a question that may be on the minds of our audience members, and I do want to also encourage them to continue to submit questions in the questions window. But during these unprecedented times, obviously the timing of the loan process may be critical for some businesses. How long generally does it take for a business to get approved for one of these programs once they apply?
You're right, Leon. People obviously want to know how quickly can I get the money when I need it. It's not helpful if it's coming too late. And so really, we touched on a couple different programs and the timing of it. And so the general answer is it depends by the program. And so, we talked about the EIDL and the ability to bridge that waiting of the program or receipt of those funds through the bridge program. And then there's also the SBA Express loan, which again, generally 36 hours turnaround time. But I think it's really important to have that conversation with your financial institution. Make sure you understand who's making the decisions, how do the decisions get made, and ask for a range of how long it takes from the start of application till the money can be in your account. And when you look at some of the other programs that we talked about with respect to the 7A and 504 loan program, where there's real estate or equipment involved, and the loan amounts are going to be over that $350,000 mark, I think you can expect at least 30 to 45 days from application to getting a full approval. You may get some indication that a term sheet that's not binding, but generally to get all that information together and get a firm approval, you're looking at that time frame. Rosie?
Yes, thank you for sharing that information with us, Joe. And I have another question that some of our audience members may be interested in asking. Are there any consultation services or free SBA resources that businesses should consider using to help them operate their business during these uncertain times?
Yeah, absolutely, Rosie. And I think this is applicable during uncertain times and just during normal course of business when we get back to that. And so there's a lot of unutilized resources that people need to be aware of and take advantage of. And the first one is the small business development centers. These are generally located in community colleges that are in all communities. So don't think that there's not one in your backyard. Chances are if you go to this link or this website, you'll find one close to you, and they can help you develop business plans. And they even have low-cost training services that are available as well too that can be really applicable. The next is the Senior Corps of Retired Executives, or SCORE, and these are mentors who are former executives that as you go through and you have questions around strategy or you just want some guidance or a sounding board, but you want to do it with someone that's been there before and has some experience, these can be great people outside of your circle that you can retain some confidence and trust in and get some direction. And again, lean on some of their experience as well too. Where it's not helpful is SCORE's not really going to help you with a business plan like the small business development centers, but they are there as mentors. And then of course there's two affinity centers. One is for women business centers and the other are for our veterans who historically have had less access to business resources, lending resources, and therefore there are people in place and resources in place to specifically help walk through just some of those unique challenges that those individuals may face that might be different from some of those that can be addressed in the technical center and the SCORE center. Leon?
Yeah, that's great information for our customers, Joe. Thanks again for that. And hopefully some of our attendees will take advantage of some of those resources. Now, so far during the presentation, we've talked a lot about the SBA programs and the Main Street lending. What other sources of financial assistance exist that may be a little less common or underpublicized?
Yeah, I think beyond the emergency loan programs and some of these standard SBA programs, individuals may not be as aware of the USDA loans that we talked about up front. And for them, their flagship program is called the Business and Industry Loan Program. And it's very akin to the SBA Loan Program in that it can be used for real estate, working capital, equipment, a number of different uses. And it comes at more favorable terms than a lot of traditional bank loans. So if you live in a town or a city rather with at least 50,000 or less people, then you are eligible to apply for USDA loans. So you want to look at that in conjunction with SBA loans. And again, information on the USDA website or in our FAQs can help lead you to determine if you're in a rural, quote unquote, rural area and how you can go about getting engaged with the USDA. I also talked about CDFIs on multiple occasions, underutilized in the sense that these are, again, are private institutions that finance community businesses in areas, in the metro areas and underserved neighborhoods where maybe there's not the same access to financial institutions, or in rural communities where, again, there's underserved by traditional banks. And so these programs are designed to stimulate local economies. And again, they're providing some reach to individuals who typically, both on the personal and business side, have not had access to the same financial resources as some metro areas. And so they're also able to take a little bit more risk, hold your hand a little bit more, as opposed to a traditional bank. And so it encouraged folks to use them as part of their resource network as well too. Rosie?
Okay, and in our agenda for this webinar, we also briefly mentioned non-bank lending sources. I'm sure a lot of our clients have been receiving mail or email from private companies offering other forms of financial assistance. Can you explain what those are and why business owners should be cautious of those programs?
Sure, Rosie. Yeah, and obviously it goes without saying that during times of crisis that there can be predatory lending firms that are out there that may try to contact you through phone calls or email or other means. And it's certainly not to paint all of these lenders with the same brush. But we say this because that a lot of times with these types of lending and alternative lenders, number one, they're not governed by a regulatory body. So there's not really the same limitations or governance that is going to be present during or when you're encountering a traditional bank that's chartered by the FDIC. And so they don't play by the same rules. And so we want you to be aware of hidden fees because the costs sometimes can be difficult to discern. They may not be expressed as a typical interest rate or annual percentage rate. And so it might be more difficult to find the hidden fees, or you might find yourself getting into one of these relationships and it becomes very difficult to get out once you've borrowed money. The most common examples that I see, and again, I want to be careful not to paint each of these lending sources as necessarily bad in and of themselves, but I just think that because of the cost of capital, you need to be especially cautious, and the fact that it's not regulated. You have factoring, which these companies actually purchase your account receivable, meaning that if you went out and got a huge contract with Walmart and you're thinking, oh my gosh, how am I going to fill that? I don't have the capital. Well, a factoring company can help you during that high growth phase and give you an advance so you can pay some of your working capital while you're trying to fulfill some of these large orders. There's merchant cash advance companies, which you get some upfront funds, and then that merchant cash advance company is going to actually debit your checking account or sweep from your merchant services account. It could be on a weekly basis, or it could be even a daily basis. So again, you need to be really careful that it could seem like a good idea on the front end of a discussion, but once you get into some of the nuances of how those funds are repaid and the actual cost, it could end up worsening your cash flow challenges. And then the last category is the online lenders where there's a presence there. And those are typically loans less than $500,000. And the idea is that you're going to get money that same day or the next day. You know, there obviously is a catch with that, in that the cost might be more difficult to discern, or again, there might be large upfront fees that you're having to pay that aren't notified to you until the very last minute. And so that's what we're saying. We want you to use extreme caution. And before you sign anything, you should consult with a financial advisor or your CPA to help you discern exactly what you're getting into. Leon?
Yeah, that's great advice, and thank you for reviewing that for our audience. And before we move on to our questions from our attendees, do you have any final tips for businesses who have been struggling financially during the pandemic?
Yeah, I think there are some key points that I want everyone to walk away with. And so we've developed a top 6 here. And so the first one is, you remember we started off talking about PPP. So if you got PPP money, don't be in a rush to submit a forgiveness application, but do stay in touch with your financial service provider. Remember, you've got 10 months after your covered period. The second one is if there was a percentage of you that either didn't receive or didn't obtain PPP fundings. And so if you investigate some of these other programs we talked about, we want you to be aware of the benefits of those, but also know some of the catches that come along with that. And don't be in such a hurry to get the money that you're not thinking through some of the challenges that may surface later. The third thing is we've identified a couple of resources for you that are out there at no cost to you. So we're telling you, don't proceed alone. Use the resource centers or talk to a CDFI. And again, you can find that on the website, or FAQs rather, to help walk you through that process and know what your options are. Tying into that, as we've tried to harp on, is we want you to exercise extreme caution regarding dealing with non-bank lending sources because of the lack of regulation. There are some bad players out there looking to take advantage of us during this time. For those of you that maybe have been fortunate that your business has not been affected as significantly by the coronavirus, consider some of the programs that we talked about today that are going to allow you to expand your business or grow your business in a way that historically maybe you haven't thought about. You might be opportunistic during this time. And then the last point is, we touched a little bit about this, but this is one that I think you should absolutely investigate, is look at state and local resources. Obviously, we can't cover all those on the call because everybody lives in a different geography. So I want you to go to your Chamber of Commerce website, either locally or at the state level, and or your state Chamber of Commerce, or excuse me, your state Commerce Department, and look for programs that are being administered, because there are funds out there, generally on the smaller end, but you should be available. You should be aware of them. Rosie?
Okay, thank you, Joe. Those are definitely some great final tips there. And we have our last poll question for our audience before we move on to our Q&A session. What do you plan to do with the information that we have covered today? And please go ahead and select all that apply. Speak to a financial advisor for more information. Discuss these options with the business owner. Apply for one of the programs discussed. Are you planning on maybe doing some additional research independently? And lastly, are you not sure yet? And we will give everyone a moment to answer that. Okay, it looks like votes are still coming in. So let's give everyone another moment to answer that. Okay, looks like most of the votes came in, so let's go ahead and share that. Okay, so let's see, 38% is the highest with discuss these options with the business owner, followed closely by doing some additional research and speaking to a financial advisor for more information.
Once again, great information to know. And then I encourage those that are doing the research for the ownership to go ahead and share not only the slide, but also once you receive the presentation in your email, you could forward that straight to your owner or anyone that makes decisions for your company financially. And hopefully this will help them out. And so now is the time that we've all been waiting for, the Q&A session. And I do have a good amount of questions from our audience members. And I do encourage you to go ahead and submit some more as we will be sending them to Joe to be answered and send those answers off to you. I'll start off with Edward here. And he sounds like he was very, he was listening very astutely to the presentation, but he wants to know, Joe, if you can, about the qualifying requirements and if you could rate them from lesser to more stringent as far as being accepted.
Yeah, and I guess without knowing the specifics of the potential program, I think I would divide it into 2 portions in terms of some of the solutions that we talked about. I'm going to say one category are some of the more the programs that are tailored for businesses that are in more economic distress. And then the other category that we talked about are those businesses that maybe have been less impacted. So when you talk about the programs with businesses that have been economically injured by the coronavirus and need some relief, I think the EIDL program, a lot of that is going to be based on just the business needs. So there's a lot more flexibility. So if you find yourself in a situation where you're thinking, well, gosh, no one's going to lend me money because business has been very difficult for me and my numbers don't look very good, or maybe I have some difficult credit history, I think the EIDL program could make a lot of sense. But remember, because that can take a lot of time, you're also going to maybe need to leverage the Express Bridge program if you have a relationship. But I want to put an exclamation mark in saying that talk to some of the resource centers that we surfaced here, the small business technical centers or the SCORE programs or the CDFIs. Call your local CDFI, and again, we put the link in here. I want to say that again because I want to emphasize that. Talk with somebody, don't go out it alone, because it really does vary greatly.
Thanks again for that, Joe. And I have a couple questions about grants. One here from Galima and another from Roth in our audience. Galima she simply asked, how can my company find the grants? So if you can just talk about that shortly. And then Roth asked, is it possible to accept both an SBA loan and a relief grant?
Both great questions. So the first question is with regard to grants. And so at the federal level, there are grants available. And I believe we'll have to get the information out in terms of the website, but a lot of the grants are really directed towards specific needs that the government has identified. And so what does that mean? A lot of those are related to medical, pharmaceutical, those types of industries where there's a need for, obviously in the situation we're in, developing a vaccine or other types of testing associated with providing some sort of medical solution for a particular situation. So they're a little bit more difficult to come by and they're more targeted at the federal level. So I'm glad to include that in our follow-up email. The second thing I would say is at the local level, they vary so greatly. And that's why I'm encouraging you to go to your local Chamber of Commerce website, have a conversation. Typically, depending on the size of the community that you're in, if you're in a large community, you may have someone designated to discuss potential grant programs that are available. Or if it's, again, a smaller community, it might be someone that manages that process. So start there. And then also look at your local state commerce department website. A lot of times there's links to public grants available or partnerships that they're involved with there as well too. So not as ubiquitous as some of the SBA and other funding programs where there's a check, where there's a catch and you have to repay the money, but there are some out there as well too. The second question was with regard to SBA financing and some of these other grant relief programs. Did I understand that correctly, Leon?
Yes, if you can accept both a grant, relief grant, and have an SBA loan.
You can. That's exactly right. Now, there's some nuance to it. So just because you got a grant does not exclude you from getting an SBA loan. You may remember that if you did receive an EIDL grant or advance of up to, initially it was $10,000, and you got a PPP loan, then the amount that you received from that EIDL grant did get subtracted out of your PPP funds. So that's the one nuance that there is. But outside of that, if you're looking at a 7A or 504 or an express loan, there's not going to be any implications that came from accepting other forms of PPP, EIDL, or some of the other aid assistance programs. So there should be no problems there.
Thanks again. And you gave some good advice about restructuring and possibly pivoting your business model. And Dennis, if you're on the line, please unmute yourself because he had a question specifically about the entertainment industry, but and also his trying to take advantage of expanding his business, possibly with the use of a loan. Dennis, are you there? Dennis, I don't want to say your last name, Dennis T. No. All right, so I'll just go ahead and ask the question on his behalf. He asked, the entertainment industry has been hit hard, but I would like to expand my business. What direction would be best suited for this type of business? And then also we had another question. A person asked, can I use these loans for a new business? So if you can just talk about the pivoting and restructuring, and if there's any limitations to using funds for a pivoted business, if that makes sense.
It does, yeah. So first with Dennis's question, which I think is a great question. Obviously, some industries have been more hit harder because of some of the closures than others. And so what I would say is, in terms of expanding, one, you might want to talk to the Small Business Technical Center or Development Center rather, because they might be able to help with business plans and developing out and building out that strategy, because maybe you have this concept in your head, but you're trying to figure out how you actually put pen to paper and develop a plan to do so. So I think that's a great idea. And then once you've developed that strategy and you have a plan, then it's easier to lay on what financial tools might be available to you to help execute that plan. So I think that would be the sequence of steps that I would recommend taking. The other thing is that you talked about, Leon, is, hey, can I get money to expand the business? And the answer is maybe, yeah. The 7A program and the 7A Express program does provide availability, and some lenders will allow projections to be included when they're qualifying a lender for a 7A loan, unlike a traditional bank loan. And so if you need funds to do that, the 7A program is something that you want to look at. Obviously there's a lot of nuance with how those programs get evaluated or your loan request, but it is an option worth pursuing for that purpose of all the options that we discussed today at the 7A loan.
And that last question was for Estella. She's the one that asked if she could use the funds for a new or different business. I just have one last topic that I want to touch on before we are unfortunately out of time today, because it was a question that we got kind of throughout. It was a common theme. If you have any tips on filling out forms in applications, and if you could just speak to why businesses get denied. If you could just help them out with maybe those processes of actually getting the loan approved.
Yeah, I think obviously that can be a very frustrating process when you hear all the benefits of the program and then it becomes so difficult. And the unfortunate answer is, whenever you're dealing with a situation where there's government bureaucracy involved, there are going to be a few more I's that need to be dotted and T's crossed. And so what I would say is this, and I know I'm repeating myself, but I'm just a big advocate for some of these organizations. So number one, if you are in a position, you have a good relationship with a financial advisor, CPA, and they're willing to accommodate your time at no cost or reasonable cost, work with them. Number two, I would say, if a bank gives you forms to fill out for a particular loan request that they're administering through the SBA, schedule time to walk through the form on the phone, via Zoom with the lender, and do it right the first time. You don't want a bunch of rework during this process. And then the third option are the resources that I've discussed or we've mentioned on this call today, which are the Community Development Financial Institutions, the CDFIs, or the Small Business Development Centers, or if you fall into an affinity group for women-owned businesses or veterans, look up those resources in your community and get help there. So you do have options. You don't have to do it alone, but you do have to do it right. And so that's the best guidance that I have for making sure that you can get through that process.
And that's great guidance, Joe. Unfortunately, we have run out of time, and all unanswered questions will be forwarded to Joe via email, and his responses will be sent to all attendees in the next coming days. So if you do have any final questions, let them pile in now, just in the final seconds before we end the webinar. And I want to thank everyone who submitted questions about today's topic, and also thanks to you, Joe, for taking the time to answer them.
My pleasure to be with you today.
Yes, thank you, Joe. And we enjoy hosting webinars for our valued customers, and as such would really appreciate your feedback. Please stick around a couple of minutes as a brief survey will open up for you to rate what you saw and heard today. Thank you for attending our presentation. We hope you found this information useful in understanding the various financial options available to help your business during the current economic crisis. Thanks again to Joe for being our guest panelist. We look forward to continuing to work with Joe on future presentations. And if you enjoyed today's webinar, we invite you to view past webinars on demand at the link provided on the screen. To all of our attendees, thank you for choosing Personnel Concepts as your provider of workplace compliance solutions. This concludes today's webinar, and we hope everyone has a great afternoon.